All right, hey, what's up guys? Scott here again with my next live trading video, and today is Tuesday, June 21st. I'm back from being on vacation all last week, so that's why I wasn't posting very much. And also, if you guys haven't seen the video I posted yesterday, it's basically my funny fake trading guru parody video. I highly recommend you guys check that one out. So that video was pretty much just meant to be a fun project between myself and my brother that we actually filmed over the course of being on vacation. So I'll post a card above linking to it so you guys can watch it after this video. And so for this video in particular, we're first going to take a look at the broader market, specifically the S&P 500 and the VIX Index, to kind of assess where the market is right now, given that last week was pretty crazy. And then after that, I'll review a few trades I took off this morning for profits. And then lastly, I'll be placing a brand new trade in Roku, which is meant to replace my NFLX trade, which did come off this morning for a nice profit. Now, briefly here before we get started, I've got a very cool opportunity for you guys where you can receive up to 10 free stocks, and each stock could be worth up to $2,500. So basically, there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they are offering you to receive up to 10 free stocks when you sign up for a Moomoo brokerage account using my link in the description of this video. And so the Moomoo trading platform is very competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by any competitor platforms. It comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your investments and trades are properly insured. And I also did open a brokerage account with Moomoo pretty recently. It was a very simple and quick process, and I did receive a lot of free shares of DraftKings, which was pretty darn cool. And again, if you get lucky, you could receive some full shares of stocks like Tesla or Google as well. And so if that sounds interesting to you guys, then again, check out my link in the description of this video to sign up and get your free stocks. And lastly here, in case any of you are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. All right, y'all, so now getting started here, and first up, we'll take a look at the broader markets, specifically here with SPY, which is a major ETF on the S&P 500. And so we'll go ahead and zoom in a bit here on the charts. And so like I mentioned, last week here was a pretty crazy week because the markets were selling off like crazy almost every single day in a row. And the reason why this all happened was pretty much twofold. Number one, if you come back up here, as I talked about in a previous live trading video, the market for a time was definitely stuck trying to fight and get above this major resistance point at around $415 per share. Right, you can see 1, 2, 3, 4, 5, 6, 7, 8 different attempts to break above that price, but every single time it failed. And as I mentioned in that previous video when I was talking about this, when the market gets stuck like this, at some point it has to go in the opposite direction, right? You're never going to see the S&Ps just stay in a super tight range like this indefinitely. The market either has to break above to the upside or break down and go lower. And so ultimately, after so many failed attempts, that's exactly what happened. And then also on top of that, which basically added more fuel to the fire last week as well, the Federal Reserve increased interest rates, the federal funds rate specifically, by a full 75 basis points. And this was the biggest rate hike by the Federal Reserve in almost 30 years. So that's pretty indicative of the fact that inflation right now is still really, really bad. So again, as a result of all that, we saw the market here completely fall apart all through last week. And so that also means this line right here, which was acting as support all through this time here, has now flipped to resistance. And we actually saw one attempt right here by the S&Ps to break above that point, but ultimately it failed and confirmed this line now as resistance. And so specifically, this line comes in at around $385 per share. So definitely keep an eye on this price point. Right, for example, if this little bounce that we're seeing right here does actually continue, my guess is we will see the S&Ps try and make it all the way back up to this price point once again. And if you're still very bearish on the market like myself, this could be right here a great time to play some bearish trades. And then conversely, on the downside, it seems we have a new support level right around 364, 365 bucks per share, somewhere in that zone. And perhaps this support might hold for some time, just like it did back over here. So therefore, if the S&Ps do return down to that level here, that could make for a good opportunity to play for another short-term bounce. And so that is currently where we're at with the market right now with equities. But also let's come over to the VIX index chart. Specifically, we'll go to /VX. These are the VIX futures contracts, and take a look at the implied volatility for the S&P 500 here. And real quick, in case you're not aware, implied volatility is basically a measurement of uncertainty or fear in the market. And it's also indicative of how expensive or cheap option prices are right now across the board. So of course, last week when the market was, completely collapsing, we saw a huge spike in implied volatility, a spike in fear, and therefore option prices across the market spiked as well. And that's why for option sellers like myself, even though it might sound a bit counterintuitive, when large sell-offs do occur and fear spikes across the market, that's actually a great time to sell options, right? Because when you do so in those kinds of situations, you're going to be able to sell your options for a much, much higher price. And so now fast forwarding to today with that small bounce that we've been seeing so far in the past couple days here, implied volatility is coming back down. But also it still is very elevated compared to the past, right? The vast majority of the time the VIX is usually well below 29% where it is right now. So bottom line point being, there is still plenty of room for the VIX to fall further, which means now is still a great time to sell some options, right? Because again, if you sell them now when the prices are still very expensive, then perhaps if implied volatility comes down a lot more over the course of the next few days or weeks, then that will also reduce the prices of the options that you sold. And naturally, of course, as an option seller, you always want the prices of your options to decrease in value over time. Now also in this video, I do want to briefly mention the 2 trades that came off this morning for profits. So now I'll come back to the monitor tab and take a look. And as you can see, both my NFLX strangle and my NVDA short put options came off this morning for nice profits. And so real quick, if we come back to the charts and we'll take a look at NVIDIA first, NVDA, and then we'll zoom in here as well. And so this trade right here was simply meant to play for a short-term bounce in NVIDIA after it came down and once again touched this pretty major support level last week. Right, basically after all the selling we saw last week, I was kind of betting that at the end of last week that we were pretty much at the point where the market was exhausted to the downside, and I wanted to play hopefully for a short-term bounce in equities, and that's what we're seeing so far this week. So again, once NVIDIA came down and touched this price level at around $155 per share, I sold a put option way out of the money, I believe with a 135 strike, so I gave myself plenty of room in case this stock continued to move lower. But fortunately, my assumptions were correct here, and I did see that nice bounce I was looking for. So that's NVIDIA, and then also let's go to Netflix real quick, and we'll zoom in here as well. And so for Netflix here, definitely a different trade compared to NVIDIA. As you can see, this stock has been simply moving sideways in this pretty nice range for the past 2 months or so. And also, if we come down here and take a look at specifically the implied volatility for Netflix, it still is very, very high compared to the past, where it usually is. So once again, this means the option prices for Netflix are very inflated or very expensive right now. So that's why I wanted to take advantage of that and sell both a call and a put as part of a short strangle strategy on this stock. So specifically for this trade, I made sure that my strikes for both my call and my put were beyond this price range here. So in particular, I sold a 215 strike call, which as you can see is above the higher end of this range right here, which basically tops out at around $210 per share. And then also on the downside, I sold a 150 strike put option, which obviously is well below the lower end of this range, as you can see there. And so ultimately, after having this trade on for only about a week, during that time, I was able to take advantage of some nice time decay, implied volatility contraction, and those two things together reduced the value of the options I sold here to the point where I could buy them back for a much lower price and make some nice profits. And so now at this point, I'm going to replace my former Netflix trade here with a very similar position in Roku. And so Roku is also in the same online video streaming space, just like Netflix here. But the reason why I'm going to go with that stock as opposed to just placing a new trade here on Netflix once again is because Roku is about half the price of Netflix. It's a much cheaper stock. And also it does have higher implied volatility. So basically that means by trading Roku now as opposed to Netflix, because the stock price is so much cheaper, it's going to require a lot less capital to place a new trade on Roku. And then also with higher implied volatility, that means I can sell my options much further away, specifically much further away from the current stock price of Roku. So now we'll go over to that stock, type in ROKU here, and then we'll go ahead and zoom in here as well. There we go. So kind of a similar story here as with Netflix. Roku has been stuck in a pretty nice price range here over the past 2 months or so, where basically it's been stuck between a price of around $110 per share on the upside and about 72 or just call it $70 per share on the downside. Moreover, coming down here and taking a look at the implied volatility for Roku, right now the current value of implied volatility is 97%, which is much, much higher than for Netflix. I believe Netflix has an implied volatility of less than 70%. And also, this current value for implied volatility of Roku here is much higher than usual compared to the past 1 year. So that's why we're seeing an IV rank of 68%. That's very good. And also an IV percentile of 87%. Very, very good. So once more, this means the option prices for Roku are among the most expensive that they've ever been in the past 12 months. And so for this trade here, I'm going to place a new short strangle on Roku, where in particular, just like with Netflix, I'm going to make sure my call strike and my put strike are going to be beyond the upper and lower ends of this range right here. So again, on the upper end, that's around $110 per share, and on the lower end, that's around $72 per share. And also, as you can see, Roku is still in a major downtrend here, so I definitely would not mind if my call strike is very, very close, if not right at the upper end of this range right here. Right, basically in this case here, I definitely want to give myself more cushion to the downside if Roku does reverse lower and perhaps finally breaks this support level here. And so with that said, we'll now come over to the trade tab here and take a look at the option chain for Roku. For this trade, I'll be in the July monthly cycle with 24 days left to go. Unfold that tab here. Typically, I want to be under 30 days until expiration. And then for the call side here, let's scroll down a little bit. And I think I'll go right with the 110 strike call option here. So again, basically right on the upper end of that range there on the charts. And then for the put side here, keeping in mind the lower end of that range is around 72, I think I'll back off a bit more and go to maybe the 68 strike. And so that looks good. I'll right click on the put option here, then go to sell and strangle. And here we go. This is my order to sell one contract of the 110 strike call, and at the same time, sell one contract of the 68 strike put option. And as a result, the total credit that I will receive for putting on this trade is about $370. That's pretty nice. And so I'll lock in a price of maybe $370 here, then go to confirm and send and take a look at the buying power effect for this trade, only about $900. That's pretty nice. Definitely much smaller than if I were to make a new trade on Netflix here. And so lastly, we'll go to send. And no fills yet on this order, so we'll come back to the monitor tab and perhaps change my price. My Roku trade is right here. And yep, as you can see here, my limit price is definitely a bit larger than the current mark price of the strangle. So I'll right click, go to cancel and replace order. And now I'll come down to maybe $365. Let's try that. Confirm and send and send. And there we go. Just got filled and price improved to $368. Awesome. Great. And so next step is to create my closing order for this trade to take my profits automatically. So I'll go ahead and right click on my option here again, then go to buy and strangle. And here we go. This is my profit taking order to buy back both contracts. And as usual, I'll try and do so for half price, or basically half my starting credit. So basically, if I sold the strangle for $368 in credit, that means half of that is $184. So we'll lock in that price, then go to this setting right here and change it from a day order to a GTC order so it's always in place. And lastly, confirm and send and send. And then finally here, the way I'm going to defend this trade if things go wrong is if Roku does either breach my call strike or my put strike, at those points, I'm either going to buy the stock if it crosses my call strike or short the stock if it falls below my put strike. Now, with that being said, of course, with Roku still being comfortably in between my strikes right now, of course, given that I just put on the trade, there's no need currently to make any stock buying or shorting orders yet. But if Roku does get close to one of my strikes, then at that point, I will create those orders and I'll show that in a different video, of course, if that happens. But for right now, we're done with this trade and I can sit back and not have to worry about it for the time being. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want up to 10 free stocks with Moomoo, then again, use my link in the description of this video to sign up and get those stocks. And also, if you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.